E nā mana, e nā reo, e nā karanga maha o te wā, tihei mōriora, tēnā koutou katoa. Great to be here. It's my fourth time at the Financial Services Council conference and my first time as Governor, as appointed over this 6-month period. I just wanted to start by saying I'm okay. The amount of times I get asked if I'm okay over the last 6 months has been quite remarkable, and people seem quite surprised that I'm still smiling through it all. I do want to acknowledge, though, that it has been an incredibly challenging time at the Reserve Bank as we face a test of trust and confidence in us as an organisation. So we're all familiar with the fact that the Reserve Bank is in the news often for our policy decisions, our publications, our research, but for too long this year the Reserve Bank has been the news, running from the sudden departure of our previous Governor in March through to the resignation with immediate effect of our Chair in August and everything in between. Trust and confidence in our economic institutions underpins our financial system and is one of the things that contributes to prosperity and well-being in the country. And that's why I want to stand here today and say that through the noise, through all the news of the last 6 months, the Reserve Bank is absolutely laser focused on our mandate for keeping low and stable inflation and a resilient and enabling financial system. And the reason for that is because it is our best contribution that we can make to give you all the confidence to look forward and transform for tomorrow, which is the theme of the conference. What gives me confidence that we're in a good position to continue delivering on our mandate is actually the transformation that we've undergone over the last 7 years as an organisation. If you cast your mind back, the Reserve Bank Act, 1989, the Reserve Bank, the Governor was the bank from a legal perspective, sole decision maker on interest rates and every other decision coming out from the Reserve Bank. And that's been a stereotype that's been quite hard to shake, that perception. The reality is, in the current framework that we're operating under, we have a well-established Monetary Policy Committee, which for 6 years now has worked together to make interest rate decisions, and we have a very experienced Reserve Bank board who are responsible for prudential policy decisions and all other matters relating to the bank. As Governor is chair of the MPC and is a member of the board and connects the two together. So with an operating framework like that, it means that in these types of environments where you've got turnover in leadership, we can continue on with an unwavering focus on what we're here to deliver on. Monetary Policy Committee over this year has been focused on judging the impact of rising global trade barriers following the so-called Liberation Day back in April. And I've got to say that's been a really challenging thing to go through because in New Zealand, I well remember standing up on the stage with inflation at 7.2%. We've just got back into the 1 to 3% range, and that period of high inflation is very fresh in the minds of households and businesses. And as policymakers, we're also very cognizant of the lessons that we learnt through that period in terms of what supply chain disruptions can mean for inflation when you get them from pandemics, wars, and climate events. Back in May this year in our monetary policy statement, we judged that on balance, the bigger impact was going to be through a fall in global demand and that effectively creating less inflation pressure in New Zealand and therefore scope for us to lower interest rates from where they were. In the August monetary policy statement a few weeks ago now, the biggest surprise really through that intervening period has been how much of a hit has been taken by domestic business and consumer confidence in this environment, such that it looks like in the middle of this year, the economy has gone through a period of stalling, creating more spare capacity, more slack, less inflation pressure and scope to lower interest rates further. In that set of projections, we had the official cash rate going down to around 2.5% by the end of this year. But as always, whether we get there and whether we get there faster or slower will just really depend on how the data plays out from here. For the board, the big focus this year has been, one of the big focuses has been delivering a capital review of the deposit-taking industry, again, to deliver on that mandate of having a resilient financial system and an enabling financial system. That work builds on our famous or infamous capital review of 2019, acknowledging what's changed since then, which is we're operating under new legislation. We have new supervisory enforcement resolution tools and powers. We've got a deposit compensation scheme up and running. We now have a new financial policy remit where the Minister asks us to concentrate on competition, efficiency, innovation in the financial system. And we also have a changing international landscape for capital settings. We're thinking about them. Other jurisdictions have been reviewing them as well. So we put out a couple of options in a consultation paper a week or so ago now, and we think that they fit the bill in terms of having something that is strong, simple, proportionate, and internationally comparable. As always, it's a consultation, so we put the proposals out there to get your feedback and get to a better final decision by the end of the year. Closer to home for this audience, just wanted to assure you that our review of IPSA, the Insurance Prudential Supervision Act 2010, is ongoing, and we are very focused on that. We got a cabinet paper through in August, which had a number of recommendations which have been approved, such that next year we can get onto a bill to have amendments to that act. Much like the capital review for the deposit-taking world, we just also want to assure you that this is not about having more regulation. It's really about having a modern regulatory framework, one that has to be revised, is now 15 years old, one where we have more graduated tools at our disposal, and one that is more internationally comparable as well. Finally, I just wanted to note that we are proud that in our latest Relationship Charter Survey, 97% of regulated insurers rated their relationship with the Reserve Bank either a good or very good, and that's up from 81% last year, and something that we've been really focused on with the industry. We know that we need to continue working with you with transparency and respect to continue earning your trust and confidence so that we can all work together to transform for tomorrow. Nau te roro, naka te roro, kai ora ai te iwi. With our contribution and your contribution, the people will prosper. Tēnā koutou katoa. Thank you.
Kia ora, Christian. Thank you for that. I'm pleased to hear you're okay and that everyone is so concerned about your well-being. Financial stability is obviously the key role of the Reserve Bank. How hard has it been to keep the day-to-day running of the bank going when you've had all these other issues going on in the background, and obviously a lot of media attention on the former governor's resignation?
I think that's where the vision of the Reserve Bank is to be the best central bank and great team. And it's that great team element, that really comes through in periods like this. The fact that it's not all about one person. It's not even about a small group of people. It's a whole organisation working together. So part of my role has been being very internally focused, giving people the confidence and courage to keep going and acknowledging that we can, do it together.
It comes at a very turbulent time globally. How is that affecting the Reserve Bank's running? How is it changing day-to-day decisions?
I think it's just something, as a central bank, you work in that environment. There's always something going on internationally. There's always a crisis. I've been reading central bankers' speeches for 25 or 30 years. They always say, "Oh, it's such an uncertain time." I've never read a speech that said it's so certain at the moment. It's obvious what to do. It's just the world that you live in. So we're well used to that.
We can't use unprecedented anymore because that was 2020 when we saw unprecedented use a lot. So now it's just back to uncertain.
Exactly. It's just the way we roll. Yep.
And how much those global factors, looking at tariffs, the sort of not knowing day to day what might happen, when you're looking at making those OCR decisions, when it's time for the NPR, how much are you taking those factors into account?
It's been a huge focus this year in terms of the backdrop and the environment. For us in New Zealand, internationally they're looking at, where are the tariffs going to land, what number are they going to be? Our tariff has gone up from, it was going to be 10%, it's now 15%. For us, it's really the second round impacts that are much, much bigger. We care about the economy as a whole, look at those aggregates, that macro view. There will be different industries that are more hard hit than others, but really it's that second round impact of how much is this going to hit global growth in total and how much that affects us all. So that's been a big focus. Global growth forecasts have fallen from a little under 3% to a little over 2.5%. So it's quite a chunky fall over that period. They've stabilised over the last few months. The big surprise has just been how much domestic businesses and households have taken a hit because they read the news, they open the newspapers, that it gets them thinking about, how cautious they should be in the future. And that's the downside risk to our projections, is that we get in that cautious spiral, induced spiral. The upside is that the reductions in interest rates that we've done so far, there's a bump in the transmission, but it flows through eventually.
You used the word surprise there. At the end of last year, I sat there when the former Reserve Bank governor said 2025 is going to be better, things are looking better. Are you surprised that things haven't improved to the extent that you thought even 8-9 months ago?
There are always surprises, yeah. I mean, that's we put out a central projection, and that's that's the central view in the knowledge that there is so much risk and uncertainty around that. And when we meet every 6 weeks as a monetary policy committee, it's all about how's the starting point changed? How's it played out differently? What does that mean? This is just the way it rolls in terms of the surprises. We did have that economic recovery going through the end of last year. Q4, even into Q1 this year, were quite solid. And it looked like monetary policy was working and we were on our way. There's just been a bit of a hiccup along the road, and so we've adjusted settings accordingly.
Can tariffs solely be blamed for that? Because what was the change that sort of saw us go backwards?
The confidence shock. Yeah. I mean, part of it is going to be tariffs, part of it's going to be everything else that's going on. There's a lot of chatter about Auckland house prices and cost of living and cost of essential goods, all of these things. So there's no doubt that people are doing it hard and it feels tough. We remain confident that monetary policy works and these things will work their way through and we will be in a better place into the end of next year, subject to whatever else sort of comes along the way.
And if things stay on the track that you're expecting, you do expect a couple more cuts to the OCR by the end of the year?
There's a central projection, yeah, and it's one consistent with 25 in October, 25 in November. But, it's just how the data plays out, and we're getting data all the time. There's been a pickup through the data through July, started to pick up. It's looking better. That's sort of baked into our projection, which has things improving through Q3 and Q4.
A question from the audience here. A modern regulatory framework requires coordination between the various regulatory bodies that we rely on for industry trust and confidence. Can you provide an update, please, on the CFOR review?
The COFA review?
Yeah.
Absolutely, and it's a huge focus. Samantha Barris and I are on the phone every week, very closely coordinated as organisations. Every managers, directors, everyone has a counterpart at the FMA that they link into. With COFA, I think what we've found, or the Council of Financial Regulators, if others aren't familiar with that, which is the Reserve Bank and the FMA are co-chairs, and then we have the Treasury, MB and Comcom are also members. We think COFA's done some good things in terms of having a regulatory calendar for the industry, so they know the pipeline coming through. We can coordinate as different agencies and work our way, have a kind of coherent package of things coming through. Our interaction through industry forums, having a sort of a one shop that people can interact through. So we're keen to keep that going and see that as a centrepiece. We feel like we've been less impactful in terms of other work streams, other coordinated work streams. There's probably been a lot of activity and not a lot of outcomes. And so that's the thing that Samantha and I are really focused on, is picking off particular topics that we can, work through in a dedicated way and be more impactful.
And what's the time frame on that review?
We're nearing the completion of that now, so it's getting to the final stages of that. We just need the Reserve Bank and the FMA sort of leading that review and then taking it back to the other members.
Looking back, how do you feel the changes to insurance solvency standards were managed by RBNZ? Are there any learnings for the IPSA review?
There are lots of learnings, and I completely acknowledge that the solvency standard review did not go well. There were too many amendments. There are many lessons. One of them is that insurance and insurance solvency is a very technical topic, and even when you've consulted with the technicians before you've gone out, you don't always pick things up. So there are real lessons there. It's a very technical subject, and we need to have the in-house capability to do that, but we also need to work really closely with those in the industry that have that capability as well, because it's a team effort. It's a consultation with industry.
Can you tell us what some of those learnings are, and are you going to have the in-house ability to do that if given you're facing funding cuts? Is that going to be an issue?
So we are facing funding cuts. We've worked through that really carefully this year. We're coming to the end of it. We've been focused on ring fencing some really technical skills. So within our prudential policy area, within our economics area, we've made sure that we still have enough resources to do the job well.
So you're giving the industry confidence. The people you've lost are not the ones that are going to be dealing.
We're absolutely focused on delivering what we need to. Yeah.
And can you give any hint on what some of those lessons you learned on the insurance solvency are?
Well, it's around that fact of just working really closely with the industry on the very technical elements, and that sometimes you won't get it all.
And on IPSA, where will the outcomes of the IPSA reforms take us in terms of alignment with international countries that we compare ourselves to? The way I sort of think about this is, it's both in the deposit taker world and the insurance world. We had a regime that was very light touch, and it was one where we had few tools, but they were often quite nuclear.
So you kind of license or register an institution when they come in, and then if you've got a nuclear tool, which you de-license them or do something really, really harsh. What we lacked, which is standard internationally, is having that sort of graduated different tools and powers that you have along the way. And so that's, I think, one of the main differences in approach, which will bring us much more in line internationally. And it's what we're hearing from the industry that they want as well.
And on those international comparisons, how does the RBNZ right-size its regulatory agenda for New Zealand, balancing its capability, capacity in comparison to other central banks?
Yeah, we need to do it what's right for New Zealand. We've been on a journey in terms of growing our resources, being more internationally comparable. Internally and externally, we talk about becoming more intensive, which is the kind of a direction of travel that we've been on. Now we need to start articulating a landing spot in terms of, where is that eventually? And it's not one, we're never going to have the resources of APRA or, the Fed or the Bank of England or whatever, but we're getting very close to it. It's an approach which is more, it's more forward-looking, it's more risk-based, it's more proactive. It's all of those things in terms of the characteristics, as opposed to being, hands-off, reactive, nuclear, which is the old style.
Do you feel, and are you worried that RBNZ is becoming more politicised, too politicised, and how are you handling that as governor? How do you plan to deal with it?
I'm watching very closely internationally what's going on, and it's hard to overstate this in terms of what's happening in the US with the independence of the Federal Reserve, and that is really worrying, and the whole international central banking community are very focused on that. When Jay Powell speaks at Basel, he gets a standing ovation before he even starts in terms of the pressure that he's under. I don't think that has spilled out, and the concern is that becomes normalised internationally. We haven't seen that, as yet, but we do have to just constantly remind people of why we do have operational independence and what benefit that brings to politicians as well as policymakers.
Have you had direct conversations with the government about that? Because we have heard the Prime Minister say he told the committee that he wants OCR to see, and politicians aren't shy about where they want the OCR to go, but telling you directly that is quite a different thing, right? And have you had conversations in which you say, "Hey, leave the job to me"?
I think it's, you know what, even through the body language, what politicians would like to see, whether they're that upfront with you or not. The way that I think about it is that I will be judged by the mandate that I'm given. So I'm going to be judged about whether inflation in 2 years' time is in the middle of the inflation range. I'm not going to be judged about whether someone gets re-elected or not. So it's that sort of transparency about what our goals are and the way we'll be assessed about them that, as central bankers keeps us anchored.
So do you try and ignore the political talk and focus on your job?
Absolutely, yeah.
And what are your concerns? Do you have any? What are your thoughts and concerns about open banking?
My next speech in my head is around the future of banking. I just think that what I find remarkable is that domestically we're very focused on competition in the banking sector, retail mortgages, interest rate margins, all of that, and it's such a massive focus. When I go and talk to my counterparts internationally, it's all about the future of banking, the future of payments, the future of money, how all of that's going to go, and it feels like we're a long way behind here domestically in terms of that being a focus. So we need things like open banking to unlock the future, what the future looks like. You look internationally, you've got things like Revolut and Wise. Everyone who's travelled internationally will have one of their accounts, the way that you can transfer money internationally at low cost instantly. We've got central bank digital currencies being launched in China, and Europe are storming ahead. You can do instant retail payments internationally in Asia. You've got the Genius Act in the US, which is promoting cryptocurrencies and stablecoin. And stablecoin are going to really lower the cost of managing your liquidity and instant transactions, tokenization of so many different assets that are going to come into the mix now. So all of that, I think, is really setting us up for quite a big transformation over the next 5 or 10 years, but we're not seeing traction domestically.
Does the Reserve Bank take some, and we're running out of time, but does the Reserve Bank take some responsibility for how slow we have been in this country then to move towards some of those trends?
The challenge we've had domestically is that the regulatory responsibility for lots of these different bits that need to come together for the future of the banking system aren't held anywhere at any one agency. And you take something, and often they're held even in agencies outside of the Council of Financial Regulators. So it's a much broader New Zealand Inc. government agency challenge. So what we're looking to do is step up, particularly in the world of payments, and say, we think it's the Reserve Bank that should be showing the leadership here, and we're willing to do it.
And just quick last question from me, because we are out of time. Got a big red number flashing at us. As we heard from the previous panel, a bit of positivity when we ended about the future, about where things are heading. Do you feel positive about all that data that you're seeing on a daily basis about how things are going?
Absolutely. Our projection is for the economy to pick up through Q3 and Q4, and we're seeing signs of it already. And part of it is, we can talk ourselves into these ruts, and there's a little bit here looking forward to talk our way out of it.
And do you want to stay on as governor? Got to ask.
Well, I give the I give the same answer to anyone on the street who asks me if I applied, which is yes. And I did that at a press conference the other day because I thought, well, it's better to do that rather than have Mike Hosking ask me 10 times.
I only asked you once. There we go. Thank you very much. Please join with me in thanking Christian Hawkesby for joining today.